Hello, everyone. Welcome to our next weekly episode of Going Live with Good Soil. This week we have Yashu, who's one of my favorite up and coming YouTubers. He does a lot of live streams that I've tuned into from time to time, and I've been on his channel before as well. And I like what he has to say. So Matt's out and invited him to kind of guest host with me. Welcome, Yashu.
Well, thanks for having me, Emmett.
Yeah. So typically, what we do is we just run down some macro stuff. If there's any macro headlines or the market overall is moving substantially one way or another, we kind of just speculate a little bit about that. And then we kind of go into Tesla stuff or any other stocks that are interesting. But we'll probably focus mostly on Tesla today. And maybe you can show us some of your kind of indicators and tools that you like to use for your analysis of Tesla stock later. And I think that'll be interesting for some of the people that watch our channel too.
Cool, sweet.
Yeah. So in terms of macro market news, I mean, the only thing I think in the news is like this debt ceiling. There was some kind of agreement on that. I know that was sort of rattling the markets recent weeks, at least perceptually, but it seems like they're going to vote on it today. And I heard on the news this morning that Pelosi sent like some note to her party, basically saying make sure everyone votes because they're not sure any Republicans will. But if all the Democrats vote, it goes to the president's desk, and they're going to have to because of some of I think Manchin or a couple of hardline Democrats that kind of took a stand. They have to probably lower their infrastructure spending from 3.5 trillion to maybe something closer to 2 trillion is kind of the speculation. Um, and I don't know. I think I wonder if there's kind of a threat in the EV stimulus bill with this downsizing of the infrastructure. Do you have any thoughts about that, Yashu? Have you heard anything or think about it?
Yeah, not particularly about the EV, and there very well could be because I think at the end of the day, that's not a huge priority for the bill for the
Yeah.
to get through. But it's funny because I almost look at the EV credits in the bill as, and we're talking pertinent to Tesla, like it's almost a disadvantage to Tesla for these EV credits to pass through. And I know
Yeah.
you've talked about this as well. You've talked about this as well. Is like it's almost like a bailout for a lot of legacy autos. It's a way for them to stay competitive, which I'm all for as someone that wants the EV industry to succeed even outside of Tesla. But, just selfishly speaking about Tesla for a second, I almost think like this not coming through, should it not come through, which I don't have any indication that it won't, is almost a boon to Tesla because it just
Mm.
leaves everyone in the dust. I don't know what you think.
Yeah, I agree. I mean, I think it separates them from the distant second and third place EV providers in the US even further. It creates more separation for them. I think the one worry I have or is that perceptually it sort of lowers the whole EV tide a little bit, even though Tesla is sort of kind of a unique anomaly that's just going to do really well no matter what. But
Mhm.
I wonder if from a perception short term at least that some of the institutional investors might pull money from the whole like EV landscape of investments they do,
Mm.
including a little bit of Tesla. So short term I worry a little bit that it could bump all EV stocks down a little bit, but I'm not worried about medium to long term Tesla, that's for sure. Yeah,
Yeah,
so
it's
we'll
almost
see.
alpha.
Yeah, exactly. Yeah. Um, so I mean, other than that, I mean, I think they're trying to get that through. I think they're trying to get that through by the end of this month in October, because I think the next debt ceiling vote is like in December. They just basically voted to extend the debt ceiling until like sometime in December. That's how these things go. The politics is always just a crazy game. It's kind of fascinating, but it's crazy and nutty. And what's it like? I mean, you're in Vancouver. What's it like being in Canada, always having to follow U.S. politics? I mean, what's that like?
It's actually that's how you know you're Canadian is when you know more about American politics than you do than you do Canadian politics. It's just a way of life here, to be honest. It's
Yeah,
most Canadians, especially that those are more tuned into the financial markets, will know a lot more about American politics. And it's
yeah,
crazy almost to look at because it's Canadian politics is so tame compared to
yeah.
American politics, and there's so much less showboating going around and all this sort of stuff. But I mean, at the end of the day, I think, and I said this on the stream last week. I said I've never bought in a stock on the Toronto Stock Exchange. Like I've never put Canadian dollars towards the stock market, and that's because, and not because I haven't been investing for a long time. My dad hasn't shown me, or he hasn't. but quite honestly, it's like, why would you not just invest all your money into American, stocks? So,
Hmm.
yeah, that's kind of the weird duopoly that we have in Canada.
Yeah, yeah, that's interesting. Yeah, yeah, it's such a U.S. politics is like so mainstream, and Chinese politics is becoming mainstream, and obviously European politics. But yeah, all these different parts of the world, it must feel weird having to follow like U.S. politics, and now I feel weird trying to have to follow Chinese politics and not really understand it. But I feel like we have to learn it more as sort of a consequence of being a Tesla investor. You have to. It's our responsibility to kind of try to understand it better.
It is.
So, yeah, speaking of the China stuff, I mean, they just came out with their sales numbers last night. What was it, 55,000 or a little more than
56.
55,000? 56,000 cars in China in September sold. Is that right? Yeah, that's pretty
Yeah.
crazy. Only, what was it? Only 3,800 exports, though, or something. Is that right? So 60,000 altogether, something like that?
No, 52, locally, and
Okay.
then plus 4 or 3.8, whatever it is, exports,
Okay.
which was expected, right? Because,
Yeah.
September is gonna be kind of the local month. Um,
Yeah. I mean, I think that has a lot to do with the jump in the price a little bit today. I mean, do you
it
think that's
does.
pretty strong? The Tesla number, that's a pretty strong number for September, right? I mean, everyone
It
speculated around
yeah.
50,000, but above is pretty good.
Yeah, I think it is come out, I think quarter over quarter up what, 20% quarter over quarter or in
Yeah,
around
something
there.
like that.
It's I think the reason why the stock's even gone up today, sitting here at 807 and 30 cents, up 2% for the day. I think do you remember earlier in the year when there was a lot of China FUD going around where,
Yeah.
there's no demand locally in China anymore, and,
Yeah.
people are just switching car company or EV companies away from Tesla because of, bans on highways and police stopping you and stuff. I think
Yeah.
we're kind of seeing, investors be like, "Okay, well, this might have not been in fact so true."
Yeah.
Selling 52,000 vehicles in 1 month locally, like, that's
That's impressive. Yeah. I mean, that's the rate of 600,000 a year. I mean, that's more than that. I mean, if they typically batch things every quarter, so the most
yeah.
is like last month, but I think they're trying to smooth it out for this next quarter, so we'll see how it goes the next 3 months if it's somewhat smoothed out. I mean, it's great for the China demand story. The one slight, I mean, I always try to look for both sides of things. The one
Mhm,
slight like downer on it is that we knew they produced and delivered X amount of cars, but now we just found out how many of those were in China. Pretty definitively for the quarter. And if having a higher number of cars sold in China is great for the long term, but for short term with the gross margins for this quarterly earnings, I mean, I still think their gross margins will be really good. But
mhm,
the more I think Elon said, they've said a couple times that the most profitable cars they have are the cars that they actually export from China to Europe. So if they had exported all 50,000 of those cars as opposed to in China, sold them, maybe they would have squeezed out more margins. But I'm not really that concerned. It's just like one little tiny, hit to the most bullish case of bull cases on Tesla. But I'm still really impressed with that number. Long term demand for China is intact, and like you said, all those earlier stories of FUD are kind of,
mhm.
there was like the news that I think they won some court case where one of those brake failure, influencers and China has to apologize publicly and pay $10,000 fine or something
Right.
like that. So, I mean, that's all good stuff. And what's interesting about China is I don't know if you remember, but like several months ago, they did seem to form some kind of like PR department for Tesla China specifically. What was there something like that? I thought a few months back.
Yeah, I kind of vaguely remember that, but I don't think we've heard from, well,
Yeah,
actually, what was it that, post that kind of that event that you were talking about at the auto show? Right
yeah.
after
It,
that.
it was right after that
Yeah.
because I think they sensed that this is getting out of control here in China, and they just didn't want to risk maybe their perception being really changed from people making things up. So they were like, all right, we're gonna have to fight back here in China. And Tesla China, maybe they have some more autonomy from a global
Mm,
perspective that Elon lets them kind of do something like that. Versus, I know in the
mm.
U.S., Elon said, I don't want PR. Maybe they're just beyond that at this point in the U.S. But
Yeah.
um,
I
yeah,
think
maybe
China's a different game.
China's a different game, yeah, and he's letting
Definitely
the
China.
Chinese, like, experts of his firm kinda manage that a little bit more autonomously, I think, which seems to be going well.
Yeah, and
Yeah,
I think when you talked about China for a second, even talking about exports, I wonder how much of, because Shanghai has just kind of shifted into this export hub at this point,
yeah,
especially for the first 2 out of 3 months of the quarter. I wonder how much of that has to do with putting pressure, in Germany, right? Of, 2 politicians or whoever is at the helm of passing Berlin finally to go live to say, "Hey, listen, we can easily turn Shanghai into an export hub and start flooding, Europe with Model 3s and Model Ys if you want
yeah,
to, or you
yeah,
can just pass this thing and we can start building tomorrow." Right?
yeah,
So I
yeah,
wonder how much of a geopolitical kind of tension, motivation there was with Shanghai just flipping the switch into an export hub really quick.
yeah,
Because if you look at first quarter, Tesla delivered about 70,000, cars locally in China. Second quarter, I have the numbers in front of me, 62,000, cars
mhm,
locally in China. And so this quarter, we're ending unofficially, officially a little bit at 73, rounding up to 74,000, right?
mhm,
So obviously, quarter over quarter growth is great. Quarter one was a lot better locally, and so I think the Tesla Q story a little bit was, hey, no one in China wants to buy a Tesla vehicle anymore. That's why they're exporting. And so we're gonna, I think, find out, especially in the next year as Berlin goes online and starts ramping, how much of which story is so true because those both of those are kind of confounding variables that we don't can't really intertwine to say
mhm,
which one is true. And you talk about listening to both sides. I think it's gonna be a really interesting year, especially fourth quarter as Berlin probably is gonna go, fingers crossed, live this quarter, this month, maybe in
yeah.
November, who knows, but it'll be interesting.
Yeah, yeah, that will be a really interesting story to see how the demand plays out with China and versus not exporting as much as they were. They'll still export to some other Asian countries. Seems like, but not to Europe. You know, and India. There was that news a couple days ago where like the Indian minister said like, "Hey," or the transportation secretary, "We're not taking any imports from China." I think they said
Yeah,
specifically, and I think China and India just are so at odds with each other.
yeah,
I do think maybe Giga Berlin will import a few cars to India initially. Maybe India will be okay with that because I think
yeah.
Elon has said they want to test a little demand with some imported cars before they commit to building them in India with a factory, right? So
Yeah, that's true. What are your thoughts on India? And are you very bullish on the vehicle on kind of the auto business in India? I'm not sure if I'm totally sold on it.
yeah, I'm not sold. I don't have enough information to be kind of an expert on India. I mean, I know there's certainly an upper class in India that would probably, some amount of the upper class in India would love a Tesla. I would imagine. I just don't know how big that upper class is. And I don't know if it's ready to be kind of mainstream for even upper middle class in India, if they even would be interested so much in Tesla or the brand. I don't know. I mean, as an example, like is Apple iPhones, are they very popular in India? I'm not sure they are. I think they're popular in China, but maybe they're not as much in India. I don't know. Do you know anything about Apple's iPhones in India?
I mean, just anecdote, and obviously the plural of anecdote is not data, but
Yeah.
anecdotally speaking, a lot of my family in India have iPhones, live iPhones. They are
Okay.
relatively expensive. Talking about like
Okay.
relative to income there, a lot
Mm-hmm.
more expensive than let's say China.
Mm-hmm.
But I think with Tesla, the big problem with India would be the grid, right?
Mm.
And charging infrastructure. Like, the
Yeah.
power goes out even in big cities in India, every now and
Yeah.
then. And you talk about electric cars, that's kind of a little bit of a problem. So I think a
That's
lot of
true.
people have said energy, Tesla energy, like, solar and all this sort of stuff. I think the big play in India is even bigger than energy. I think it's human capital. If they
Mm.
can establish some sort of a relationship with India, albeit just maybe at the surface level, but they can
Mhm.
attract human capital, which we know a lot of Indian immigrants come into, let's say San Fran, kind of
Mhm.
the tech and the engineering space to accrue to and Elon said kind of the limiting factor is hiring, right? Um, I think that's the bigger opportunity longer run than maybe energy even, but I could
Hmm.
be very wrong.
Yeah, no, there's probably a lot of great software engineers and such they could use from India, I would imagine. Yeah, that's a good point. Partnering with India for more human capital. Yeah. Um, So moving around the world to like Giga Berlin, there was like that festival over the weekend. That was pretty cool. I saw some videos of the rave afterwards. Looked pretty sweet. And Elon gave a presentation. And did you have any takeaways from that? Did you think anything of note of that? Or I mean, there's lots of cool little nuanced improvements in the Model Y. It seems like with the headlights or the paint colors or the way they're
Yeah.
going to make the battery pack and the seat on top of the, attached to the battery pack. But anything interesting that stood out to you?
Nothing massive, and I kinda said that it wasn't one thing that kinda wowed me. It was kind of a conglomeration of little things that were like, "Okay, that's interesting," right?
Yeah.
Like, I
Yeah.
think the biggest takeaway for me was that it's a lot more ahead, in terms of construction and progress than I probably even pictured it to be. And now
Yeah.
admittedly, that could just be because, as someone that's more ignorant than I should be, I should have known. But really,
Yeah.
like, coming into the factory, getting kind of video of stuff that, had not been seen before and seeing kind of all the lines put together, it just kind of solidified to me that, hey, within, like Elon said, within a couple of hours after approval, they can start pumping out vehicles.
Yeah.
Um, but
That's
I'm
amazing.
curious to hear about your takeaways from Berlin.
Yeah, I was really impressed. I think Elon's trying really hard. I mean, I was actually pretty impressed that he sort of memorized the first few minutes in German and was trying to speak German in the beginning of the presentation. That was impressive. Like that's not easy, not even for Elon to like such a different language to English to like try to memorize how to speak it for a few minutes like that. So that was really, that shows that he's definitely putting a lot of heart, a lot of effort into getting Germany on board and the German culture on board with Tesla. I know I think it's as important to him as Tesla, Austin, the Austin factory in China. They're all equally important to him. They're like he wants to make sure they all thrive and succeed. And the big the big risk with Giga Berlin is the regulatory stuff going on. They got to wait for these extra approval. I mean, it seems like they've cut through almost all the red tape, but then there's always another piece they have to cut through or another piece it feels like.
Yeah.
So I'm just chomping at the bit, waiting for them to cut through whatever this last final bit is to get more than I think they right now they've got approval to build like 250 cars as a test, and pretty soon then they'll be approved to just turn the lights on and go full out, up to a certain level. So as long as the regulatory, it can't be as bad as California, as the Bay Area. That's what I'm imagining, but maybe it is, and they're struggling there too. So as long as they get past this kind of bureaucratic process in Giga Berlin, I'm very confident it will be very successful. But that's the only major risk I see. And he didn't seem to comment on that really in any negative way this time. At this present, in the past, he's kind of given backhanded, like passive criticisms. I feel like, but I
Right.
didn't I didn't notice that in this presentation. So that's hopefully a good sign.
For sure.
Yeah. So what's the stock at right now? I mean, we're live. I'm just going to pull up my chart. You got your chart. Everyone watching probably is watching Tesla stock. I mean, we're still above eight. I mean, I guess we titled it like "Fight for 800." Good timing. Luckily, it's above 800 when we're talking, so we can be
Yeah.
in a good mood. I mean,
808.
$808 right now at 808.27. I mean, 13.4 million shares already. That's pretty good volume for halfway
Mhm.
through the day. I mean, do you have any? I mean, we've been watching this 800 mark for a while, waiting for it. It's temporarily going through it and come back down. Do you think
Yep.
we're getting through it for good this time, or what do you think, Yashu?
It really feels like it, to be honest, because we've kind of pounded at the 800 wall twice, I wanna say in the last week and a half ish,
Yeah,
and we flirted up to 806 was, 807 was the high that we hit,
yeah,
the other day. It really feels like today and I tweeted this out. As long as we close above 800 today, I'll be happy.
yeah,
Just unlocking, and it's 808.50 right now as we speak. As long as we close above 800, because I think that's the psychological barrier that not only psychological, but there's a lot of stops there. Put for let's people that were, let's say, bag holding for months and months and months on Tesla that were short term traders. There's a lot of shorts that exist at psychological levels that are ready to short at 800 and then cover at 798 or something like that for some quick
yeah,
alpha. So breaking above 800 is nice. And to put everything in perspective for just a hot second, like this is $4,000 a share, right? Like
yeah, yeah,
pre-split,
yeah.
which it's so
Insane.
funny. It is insane. Like if you told me a year ago, well, maybe not a year
2
ago,
years.
yeah, probably like a year and a half at least ago that we'd be seeing at $4,000 a share. Really, like,
Yeah,
anything would be, even if we fell 10%, I'd be like, whatever. So I think having context is important
Yeah.
here. Um, but I think what we see here and coming into quarter four, I think we finally have investors like, okay, China is fixed, or China demand is fixed. Tesla's kind of bucking the trend on a lot of days. Like we'll see, Nasdaq down or flat, and Tesla's up 1 or 2%. So
Yeah.
obviously there's kind of net buying happening. The question is
Mhm.
how much and by when. So
Yeah. Yeah. Yeah, I think what you said there about it being psychological is a big deal. Like, yeah, share price is just kind of arbitrary. Market cap is what people should use to value. And coincidentally, Tesla's share price almost coincides to $100 million mark. So the market cap is about 800 billion, around 800, about. But
yeah.
I think just psychologically, this 800 kind of round number we've been kind of hovering around for a while, getting closer and closer to. I think, like you said, really the people who move the market the most are kind of the institutional longs and shorts as opposed to retail folks. And so I could imagine there's like a bunch of institutional funds out there, mutual funds, or maybe a big hedge fund weighting it differently, and the portfolio managers telling his traders like, let's cut our weight by 50% when it gets to 800. Telling his traders that like a week or two ago or something, and so his traders, their job is to kind of figure out how to cut their position in half around 800. And so they've been doing that, and so
Mm.
now that that's sort of done, I feel like that, if we stay above 800 like this convincingly, I think that's done. That round number kind of overweighting, underweighting, instruction that might be going on for some institutions. A lot of institutions do not work anything like that, but some I think do, are more traditional and old school. So uh, I think that psychological barrier, like you said, where if we can close, clear above 800, that's really strong, and as long as the macro market doesn't, capitulate big time, which I don't think it should. I mean, we're kind of flat today, which is good. I'm happy if the macro market just stays flat. Um, but as long as it doesn't suddenly drop 3% on some kind of, scare of the debt ceiling not passing suddenly or something, then I think things are looking good for Tesla short term going into the earnings report next week. Yeah, the earnings report is a week early too, right? I mean, a few days early. Usually it's like the next Monday, but
Yeah.
yeah, this 800 mark is really fascinating for that reason. But I mean, people like to buy ahead of buy on the rumor, sell on the news, and I feel like the gross margins, most of the smart money is probably realizing the gross margins are going to be better than most people expect, and maybe buying up a little more here. Do you think we'll get kind of a what do you think will happen after earnings from if it is good gross margins? What do you think?
Yeah, I mean, I think last quarter might be, and obviously anything can happen, right? Who knows? Anything can age like milk looking back.
Yeah,
But I think with earnings, I think last quarter was pretty indicative that if Tesla comes out with a really high gross margin, let's say sub or above 22, 23%, um, it's not necessarily true that Tesla's gonna rally, right?
yeah,
The day after earnings last quarter, I remember everyone, and even Rob Maurer actually, the
yeah,
most cool, calm, collected guy being kind of
yeah,
shocked about seeing the price action. That goes to show you that, this is really just stock price action is so stochastic at times where, you can't really say what's gonna happen with it's all about odds. And so kind of harping on your point there, I think a lot of front running is what we're seeing. Even if you look at the last and here, do you want me to share my screen here, Emmett?
yeah. Show me your share. Let's see your screen here. Where you're.
Let
Yeah,
me just look at I will pull up Webull here for a second just so I could talk about price action. If we look at it's the middle of September 23rd onwards, back from the low of 740 all the way up to where we're sitting now, 809.
yeah,
I think this is likely institutional front running, acquiring a position prior to earnings. Now,
mm,
if that theory is true, and let's say earnings come out and Tesla knocks it out of the park, like a lot of these trading front run, let's say prop firms even might want to dump shares after hours or the following day. I think the classic Tesla post earnings day is, oh great, Tesla has had awesome earnings. Tesla's up 5% in the morning, and then by close it's somehow red, right?
yeah,
That's kind of been the classic Tesla post earnings
yeah,
post earnings day movement.
yeah.
So
Recently, yeah. I mean, I
as
remember in
of
the
late.
past where there would sometimes be, it'd be surprise upside, and then that was when there was a lot more shorts in play. Like, I don't think there's as many shorts, relatively speaking, in play that there used to be. But when there used to be a lot of shorts in play, and their their narratives were kind of collapsing in front of them when Tesla would print a really good earnings report, then you'd have a lot of those shorts adding to the covering, and so sometimes you'd see a good earnings report like what we are sort of anticipating here, and then the stock would just go up another 10% over the course of the trading day from what it opens at even. So it opens up
Yeah.
5%, then another 10% up. But I don't know if we're going to see many of those days for again. Like I think this earnings report will be good, but like you were saying, last quarter earnings was fantastic, way better than anyone expected. And the stock kind of just languished. And I think it ended red at the end of that day or something the next day, or maybe it was up like $5 instead of like $50,
Mhm.
like it started in the morning or something. So it's hard to predict. It's very uncertain. Um, it's hard to
Mhm.
predict, but yeah, I mean, right now we're happy with the momentum going into earnings, and anything can happen. So now that you're sharing your screen, I mean, what's kind of what kind of things do you like to look at? Because I know you talk about some certain indicators, and I like looking at the charts too. To be honest, I'm not a huge fan of like moving averages and relativity. I mean, trade. I forget relative trading or whatever indicators, but I do like looking at the charts just to kind of gauge from what I think is like a mass psychology point of view of where the stock is going versus where it was at a certain time and so forth. So what do you like to look at with with your kind of tools and indicators?
Yeah, and I think, prefacing all this, I think all charts are is really price action and tells us where buyers are sitting and where sellers might be sitting. And really, I like to keep it extremely simple. I don't have a million different indicators usually on my chart because they're all derivatives of price action. That's all it is,
Yeah,
right?
yeah,
Everything is just looking at the trade book where who bought when and how much on between the bid and ask where, right? And then
yeah.
everything is derived from that point. So really keeping it basic for me, I just keep all of my EMAs up. So just my whether it's exponential moving averages or simple moving averages, don't really have a preference between one or the other. But keeping those up at the 9 day, and by the way, this chart is a daily graph of Tesla. So
Hmm.
having the 9 day, having let's say the 20 or the 21 day, the 50 day, the 100 day, just gives me just an average price point to look at on the longer and the shorter term. To look at,
Hmm.
okay, if we were to take volume, and we talk about volume weighted average price a lot intraday, but if we were to take price action and just average it out over the last 9 days, what is it sitting at? And I
Hmm.
think the reason why I look at that, and I'll zoom in here to kind of price
Yeah.
action as of late, you'll see that orange line is the 9 EMA, or it's the 9 yeah, EMA in this case, exponential moving average, right? And that's sitting at $786. So you take price action over the last 9 days, Tesla's average is sitting at 786. The reason why I look at that is, just like algorithm wise, trading wise, let's say if you're a prop trading firm, these are often good entry points for shorter term trades or good entry points for shorter term, let's say shorts. And
Hmm.
so when you look at the stock coming down, I look at this as more of a demand line. Where can there be demand sitting at disproportionately on a stock on the downside, right? And so coming down to the 9 EMA, 786. When you see Tesla run, that's why I was saying all of last week, I'm really happy with the way Tesla's running because every time it was consolidating back at the 9 EMA to kind of pick up more demand, pick up more steam, and to not
Hmm.
get too exhausted past the 9 EMA, which kind of where we're sitting right now is a little bit further past than I'd kind of like. And so
Yeah.
just keeping it simple, having just moving averages, I think is very simple for price action for me. And then I look at options premium as well. So I'll
Hmm.
come into an options chain and I'll usually come out the money, let's say one standard deviation, which is about 16 delta out the money. And I'll come
Hmm.
in and I'll let me make my Weeble a little bit bigger here. And I'll come in here out the money. I'll just look at how pricing is on the tail ends. So next week's options expiration chain, we have to remember has earnings baked into it.
Hmm.
Earnings is on the Wednesday. This chain expires on the Friday on the 22nd. So
Hmm.
coming into what like, and it's never perfect with this because there's not always a delta that exists, but the 16-17 delta is kind of what I look for. We can see that's the 860 strike for next week. So it's about
Hmm.
sitting at $7. Okay. So market makers, the market, whoever you want to call it, is whoever is dictating a large portion of this pricing is predicting is pricing this out of the money 860 strike, call it $7. And then I'll like to come out the money the same delta as 16 on the put side. So I'll come
Mhm.
out and this is 11. So gauging from this, 11 versus 7, you can say that there's more put bias. There's more heavy put action going on. There's a pricing at least on the tail end.
Mhm.
And looking at that, and what I've noticed with Tesla, especially this year, not so much true by the way last year, is that unless there's a large amount of premium baked into, and you talk about even pricing sometimes, and sometimes you'll be kind of call bias, which this year I've seen very little call bias on,
Mhm.
let's say 1 or 2 weeks out expiration. And
Mhm.
so looking at the bias out the money, let's say one standard deviation out, I can kind of get a gauge of whether or not Tesla stands a chance to let's say continue to rally. And so when we would see those really big shifts from, let's say, really big put bias, and all of a sudden now we're, let's say, call bias on one standard
Mhm.
deviation out, that's when we would often get those really big rippers in Tesla, those 3 or 4, 5% moves. And I think
Mhm.
that's indicative of a large portion of call buying happening. That's kind of skewing that premium.
Hmm.
So none of these indicators, by the way, are the end all be all. None of them are black and white. None
Sure.
of them give you exactly what you need. And I think that much is obvious and evident. But looking at odds and looking at everything put together, you kind of get this story told. And taking technicals is only maybe 30, 40% of the story. What trumps technicals every day is news and
Yeah.
catalysts.
Yeah.
If Elon comes out and Elon says, "Hey, listen, Fremont is actually closing," right?
Yeah.
Or something nuts,
Yeah.
then you can expect the technicals to mean absolutely nothing.
Yeah.
So the news always comes first for me. Fundamentals always come first, catalysts,
Yeah.
and then technicals are just a layer we can add on top of that.
And like you said, like in an example, I feel like there's always sort of like a tendency for a black swan downside event more so than a possibility of the opposite upside event. Like, what's the most upside event there could be? Oh, Chinese government's buying Tesla for $2 trillion or something. I don't know.
Yeah.
I'm just imagining that, but that's like so far out of the most downside. There's several downside catalyst potential news events that could drop Tesla 10 or 20% pretty quickly.
Mhm.
There's not a whole lot of upside other than the earnings report. Obviously, there's not a whole lot of upside things that could catapult to 10 or 20%. So I wonder if that has something to do with the puts being a little more expensive too. Is just that there's always sort of the potential for negative news to be more impactful than positive news. I don't know. What do you think about that?
Generally, yeah, like, generally correct, right? Often, especially in, like, something like Apple, that's priced so perfectly. There's so many market makers in a stock like Apple,
Yeah.
a lot more than Tesla. I think Tesla has Citadel and Susquehanna, but I think only one or the other is big enough to actually market make at this point. Um, and I've checked the 13F filings coming out this quarter. But really, put bias is always gonna be a little bit heavier, and you're right, because of those black swan events. But not only that, but the way I look at it is 90 something percent of the market is usually, when we talk about investorship and kind of layman investors, they're long stock. And so when you're long stock, the only insurance plan you really have for black swan events is buying puts. And
Hmm.
so in general, what you're going to have is the majority of the market long equity and then buying insurance ahead of something like earnings. So you're always going to expect a little bit of put bias if all things being equal. I think when you look at Tesla's option chain, I think it's a little bit more skewed than kind of what you'd want anyways.
Yeah.
Um, but yeah, again, this just gives, and you can come out to different time to different expirations and get a different idea as well.
Cool. Yeah. And now you also mentioned that we were chatting a little bit before this, like option sweeps. I found that really most interesting when you were talking to me about the option sweeps. You noticed something this morning of like a 840 call or something. Do you want to show me anything on that?
Yeah, so and this is a paid service. There's a million out there,
Yeah.
but essentially, when we talk about option sweeps, calls or puts, sweeps are generally speaking when a bigger institution or a bigger whale is coming into the options market. Let's say targeting something like the 900 strike out of the monies for next week, so really far out the money, and then they're basically telling their order maker, "Hey, hit me at the ask. I don't care what I need to pay. I need to get filled." And then oftentimes with sweeps, you'll even see some sort of disguising effect where they'll try to go through different exchanges to not be seen. And so these services can kind of conglomerate, put them together to the best of their ability, and then show you, okay, for example, and hopefully you guys can see it here, but if not, I'll just speak it out. There was and the one that you're talking about was a 900 strike call, and I'll just
Mhm.
make this the only one. New 900 strike call sweep for about 100 and or this one again, you have to look at the premium. This one was only 18 grand, so nothing massive in terms of premium. It's the ones that you look at, like right now, we just got a January 21st, 2022. So, 3 or 4 months out, 920 in the money put sweep for
Wow.
1.64 million, right?
Wow.
And the way I look at this, and everyone's gonna have their own interpretation. I look at out the money sweeps a lot more aggressively than I do in the money sweeps. If someone's coming out 920 call for January and sweeping that 1.6
Yeah.
million worth, I think that's a lot more than coming in the money because if in the money you don't have as much premium and premium decay, and it's mostly intrinsic value, or the majority of it is. So,
Yeah.
but going through this, you can kind of tell, okay, if someone's coming in and they're sweeping 900 strike calls for this week, 2 days left, right? 3 days left in this week. They're sweeping 850 calls for this week, hand over fist, 100 grand, 100
Yeah.
grand, 100 grand. Then you kind of get an idea, okay, like who is doing this and do they know something that I don't?
Yeah. Yeah, no, it's good. And can you tell if they're like the one you referenced for the puts, the January 920 put sweep for like 1.5 million? Can you tell if does it give you kind of indication if the the retail or institution that versus the market, assuming there's a market maker on the other side, right? It's not two kind of institutions crossing a trade on something like this. Assuming the market takers taking the other side of it, does it kind of give you indication of which side the market maker is on versus which side the institution or high net worth retail person is on?
Yeah. So essentially, right here under details, it'll tell you this person bought 115 contracts at $142 a pop on the ask side. And
Oh, so
so
then you know that they crossed the
they
bid offer. So they're probably the ones that are the retail or institution in the yeah, makes
Yeah,
sense.
and sometimes you'll even see, like, for example, I'll just scroll to the and look at the topmost one. This is a 1,000 strike call sweep for only 27K. So we can probably just discount this, but it's
Yeah.
above the ask. Sometimes you'll see above the ask as well, and
Wow.
you'll kind of ask yourself, like, who's coming in above the ask this far out the money, right?
Yeah,
And so
yeah,
if this was a 300,000 300,000 order premium, that'd be a different story. It's a relatively smaller position at 27.
yeah.
um, and
Probably
I'm
a
also
Robinhood trader getting screwed on payment for order flow. Probably.
very, very possible. But I'm kind of convinced that we can make whatever theory we want out of this, but I'm pretty sure that there are algos tied to sweep order of calls and puts also
Mhm.
having, let's say, another marginal effect on the price of trading.
Hmm.
So
Yeah.
it's just so meta.
Yeah. No, it's neat. I mean, all the data points are important, I think. I used to really look closely at like the Nasdaq every 2 weeks reported the short interest, and that was back when short interest was like real. I feel like was very important to Tesla when it would kind of when it was on the cusp of a short squeeze, and it was like on the cusp of a short squeeze for like a year or two straight, and then it catapult. You just don't know when that's going to happen, but when it was like 40 or 50% shorted, you just knew at some point those people would have to cover. And so it was fun to like watch that data point so closely
Yeah.
all the time and track the borrow fees. And
Hmm.
so this is like a different data point with regards to the options, actual block trades of options going on and being reported, and trying to figure out what big buyers or sellers are doing here or there. And it doesn't really tell you though, like like you said, like you can tell if, that if it crosses the ask or whatever, then that's what the retail or institutional person did. They bought it, but it doesn't tell you if it's like a buy to close or a buy to. I mean, we're assuming they're all buy to open positions, but you can't tell for sure if it was a buy to close, like if they're closing out a position they had. Can you?
Yeah, yeah. So that's where it's a little bit finicky. The only thing we could really figure out is, okay, if someone's coming in at the ask, they're
Hmm.
usually buying. We don't know if it's to close or to open.
Hmm.
Now, every different site will have their own way that they will tell you that they're convinced if it's a sweep. Technically, if they label
Yeah.
it a sweep, they're going to tell you, okay, this is a buy to open.
Yeah.
Because just by definition, if you're sweeping something, you're coming at the ask or above the ask. And
Yeah.
so that would tell you that you're buying to open. They have their ways, I'm not entirely sure. I consider these sweeps as buy to opens,
Hmm.
not buy to closes.
Yeah.
But
Yeah, I guess open interest isn't that for options contracts? I think that's per strike, and it's not just overall for all the options of Tesla. I think you can look up open interest. I could be wrong for each individual strike for each month or week or whatever. And so
yep,
maybe if you looked at the open interest previous to that big order, if the open interest was, way less for that particular strike and month, and then there's a big order that comes in that's more than the open interest, then you'd know that, oh, that's someone definitely opening the new position because the open interest in that contract wasn't already big enough to close a position.
yeah,
So
that's a good point. And perhaps these guys, that's what they do. Who knows?
yeah, they probably automatically fill that
Yeah,
data in to figure it out, I would think.
for sure,
They're good.
for sure. Yeah, that's a good way to tell. Yeah.
Cool. Yeah, interesting going over this stuff. Always fascinating. I'm sure it seems like we got a lot of questions coming in. Anything else you wanted to show us, or should we just go to the Q&A portion and see what people want to ask?
Yeah, we can go to the Q&A. Just one thing I'd add is a lot of these services, just on passing us all this question, a lot of these services will have dark pool trades as well. So when you
Mm,
have two institutions or two hedge funds that are privately exchanging shares at a trade a negotiated on price, and they'll come in and they'll put that in the order book, although that will be perhaps a little bit delayed. A lot of these
mhm.
services will actually give you dark pool prints as well, which you can tell later on in the day if there are buyers or sells depending on where they kind of hit.
Cool, cool. And your
Yep.
favorite services are what black box here and something else you use?
I I'm kinda agnostic. I've been
Okay.
trying Flow Algo, I've tried
Yeah.
Black Box. I'm not married to a solution.
Okay.
If some solutions listen to this and they wanna hit me up, go for it.
Yeah. Okay, cool. All right. So yeah, Alan, do you want to, I guess, put up some questions? We'll do some Q&A. Maybe we'll do some Q&A for a little longer today. If we have time, we'll go a little longer than the full hour and see how many questions we can get to. So from Alex Landon, good soil investment management question. Do you guys think the fallout from Evergrande or a larger Chinese real estate bubble could have significant negative consequences on the broader market? I am slightly worried about the Chinese real estate bubble. I was listening to something about Evergrande, professor from Stanford, who's or not Stanford, somewhere else, but sort of views himself as an expert on Chinese economy. And he was talking about Chinese, and he pointed out one stat that really worried me a little bit, that Chinese real estate collectively is valued at 2 times all of the U.S. real estate collectively, or something like that. So I mean, the Chinese economy is big. It's almost as big as U.S. economy at this point, but it's not 2 times as big. So for the real estate to be valued like double the U.S. real estate market does worry me a little bit that there's sort of a bubble there. I don't know how that's going to play out exactly, but it is something to keep an eye on, and try to follow people that are sort of signals versus there's lots of noise on this stuff. So it's hard to know what the signal versus the noise is. So just something to keep an eye on, I'd say. But I don't know how it's going to impact the broader market, worst case, and what the likelihood is yet. I don't really have an informed opinion too much. Good question, though. From KM686, China is having nationwide planned electricity outages, and the Chinese economy is not doing so well with all the problems going on domestically. Are you concerned with Tesla's China plan? You want to take a stab at that one, Yashu?
Sure. I mean, undoubtedly, I think whenever you have logistical issues, it's something to be worried about, not just for Tesla, but let's look at something like Apple, even, right? Huge Chinese footprint for Apple. Now, I mean, at the end of the day, I think we have to look at relative risk. And is Tesla at more of a risk than, let's say, any other said company that operates in China manufacturing? I'm not entirely sure that's the case. So, talking about relative risk, I'm not too worried, personally speaking. And I think China, one thing you can talk about with democracy versus, let's say something like meritocracy is at the end of the day, with what is going to help establish their free or what's going to help establish economic boon, they will go as far as they need to make sure that that's the case. So I'm not relatively worried about that.
Yeah, and we have, like, even the US, PG&E does planned electricity outages here in Northern California already. So, you know, it seems like governments or local governments, it seems like a tactic that is used for whether it's fire risk or just there's issues with the energy grid at that time that they're working on. it doesn't seem like it's end of the world kind of alert necessarily. Like, oh no, energy is running out here. So there's obviously a lot of fear mongering in any kind of news event. Any way it could be construed into a fear mongering end of the world headline, you better bet they're going to construe it into that, just so it gets more clicks. So we just have to pay attention to all these kind of headlines coming out of wherever, China or wherever, that how is this being spun to be the most fearful type thing possible, and kind of work backwards from that a little bit. So next question here. From Jan Brun Anderson, isn't the limiting factor in Berlin battery supply? Will the initial production be based on batteries imported from Nevada? I think, didn't Elon mention they're going to import batteries initially from Shanghai for Berlin? I think I could be wrong, but I thought that he mentioned that. Maybe Austin they're going to initially import from Nevada, but I think they're going to initially import batteries from China to Berlin potentially. Maybe I got that wrong, but I think they're trying to build the batteries in house in Berlin. Ultimately, it's just a matter of how long they get the lines up. What do you think, Yashu?
Yeah, I think Austin is going to be getting the Cato Road 4680 cells, and I think Elon,
Oh
someone
wait,
correct
we
me
just
if
hit a
I'm
new high, 811
Oh,
35.
there we go.
Whoa, nice.
Wow. Jeez. Wait,
All right, keep going, Yashu. Keep talking. It's going up.
this is good luck.
Sorry
There
to
we go.
interrupt you.
I think Giga Austin will be getting 4680s from Cato Road. I think 10 gigawatt hours, I think, is what Elon said that they're projecting out of Cato Road, which is nuts because Cato Road is so small, and Elon has said that's more than enough to kind of satiate Model Ys for now in Austin. And then I think with Berlin, I think the plan was 2170s.
Yeah,
Although that being said, I think we saw the 4680 structural pack on display. Not sure if that was just kind of a hey, it's on display, or hey, like this is closer than you think.
yeah.
Um, so I would not be entirely shocked. And I did read some unverified Twitter rumors that 4680s will be coming out of Berlin very soon. So
Yeah.
not not entirely sure, but, it sounds like China to Berlin is kind of the plan for now.
Yeah, I wouldn't be surprised if he's kind of sandbagging the 4680 progress a little bit. I wouldn't be surprised. I don't count on that being the case, but I wouldn't be surprised if he's sort of doing that a little bit. All right, let's go
Yeah.
to the next question here. From Terrence. Hey, Emmett, will you be more comfortable holding Tesla shares or Leaps moving into the first half of 2022? I mean, I hold a ton of Tesla shares in my personal, account. Most of my net worth is in Tesla shares. I hold, and I'm very comfortable holding it for this whole decade, to be honest. I do have a bunch of it on margin. I'm afraid to close out of my share. I'm so comfortable. I should be closing out of some shares to cover my margin balance, but I've had to borrow to pay taxes or whatever. And but I really, at some point, need to start closing a little bit of my shares just to on my personal account. My IRA account, is different. That's not tax consequence. I mentioned recently I sold some of my shares in my IRA account to do some private investing out of my IRA. But my personal account's the majority of my net worth. Tesla shares, very comfortable holding it for the rest of the decade. I think it's I view Tesla sort of like the safest bet to get like a 3 to 5x return over the next few years of any stock. It's not going to be a 10x return in 2 or 3 years. There's other stocks out there that probably could be a 10x return, but trying to find that is very hard. But I feel like Tesla, to me, is a very safe, like 3x return over the next 2 to 5 years, as full self-driving becomes more mainstream and such. So we'll see. But yeah, Leaps, that's another story because you have like 1 or 2 year time period until they expire. And so that's a little riskier. I'm not, if I was a gambler again, I'd probably be buying Leaps every time Tesla dipped below, it's whatever moving average, or it's gone below, like, when it was down below 600, I would have bought a lot more Leaps then or something. But more recently, we sold a bunch of the puts in our fund, at least deep in the money, 1,000 strike June 2023 puts, and those are doing quite well. Selling all of those, we'll probably close out of those if they've gone to below $100. We sold them at $500 or something. But yeah, a 10x return is not in the cards in my mind for Tesla anytime in the next 2 or 3 years like it used to be. So are you pretty comfortable holding shares? I mean, I would imagine, right? I mean, all of us probably are pretty comfortable holding the shares.
Yeah.
What about the Leaps, Yashu? What are your thoughts on that?
Yeah, so I've been like obviously bag holding on some Leaps earlier this year, although they've been turning better. I think what we saw was like a massive deflationary effect on implied volatility after what was such a crazy 2020 with Corona, and everyone was buying options, and premium was
Yeah.
inflating, and Tesla was inflating, and so we saw this massive deflationary effect on implied volatility, and and I think if you're looking at implied volatility now, it's relatively low. Speaking, I think a 52-week implied volatility rank is still sitting at like 18 or 20 or something like that. So
Yeah.
leaps are still good, but I was buying 2023. I want to buy more time. Probably going to roll out some of my January that are expiring this January out that far. Just and as we're rising, this was kind of what I was hoping for. Is with options pricing is a fast couple of weeks worth of a up move, sell, roll, and then even if Tesla consolidates for a month or two after that, at least your kind of premium doesn't decay as fast. So
Yeah.
yeah, but with stock, I don't even bother kinda checking. I just every now and then
Yeah.
when it dips, I just buy a little bit more, and then I just kinda leave it.
I wish they sold like 5-year out leaps for Tesla. I'd really like to look at those. I'd be probably a big buyer of those, 5-year out leaps, but 2-year out, yeah, I like the more time, the better. I like you, Yashu. So
Yeah.
let's
Hey,
go to
there's
the next.
January
Yeah,
there's also January 2024 now, so that
that's
buys you a
right.
bit
Those came out
right?
recently, right? Yeah,
Yeah.
yeah. I was looking at some of those. So next question from Alex B. What's your favorite stock after Tesla for selling options right now? Could you talk
Mm,
more about personal short-term trading? Um, So I guess for me, my favorite stock after Tesla for selling options right now. There's a couple of stocks that are kind of high on my wanting to short list that I've sort of sold some naked calls on. That's not something I've really done before, but some of these stocks are just crazy, and I'm just like, man, this stock's not going to be worth that much in a year or two, or you know. So, and I sell them like out of the money, so but we just played around with a little bit of that. So I'm always trying, to think about things differently. But that's not necessarily a wise thing to do, because if you're wrong, you just have to know when to exit without getting your face ripped off. Because so many people were wrong on Tesla, for example, selling naked calls and got
Yeah.
really hurt, right? Um, and with personal short-term trading, um, I guess, you know, just in my IRA account is where I do my personal short-term trading now. And that's not really necessarily well thought out, well researched trade ideas in my IRA. The well thought out, well researched trade ideas are in our fund. But on a personal level, if I just have like a hunch of something or read about something, and I want to just speculate a little bit and here and there, I'll do some trades there. But I haven't done a whole lot of that recently. Most of my investing decisions and analysis is focused on our fund. Um, so I don't know, Yash, any stocks that you like to sell options on, or anything else other than Tesla that you like to do short term trading in?
Yeah, generally shorter term trading stuff. I like SPX or I like the Qs. Like I like generally an SPY. I like SPX because an SPY because it allows you to do some after hours stuff and pre market
Yeah,
stuff and with options, which is nice. Uh, but quite honestly, like it takes so much mental fortitude for me to just focus on Tesla that it's hard for me to focus on other stocks sometimes. And to answer your question about favorite stock about selling options, I think probably be agnostic. Sort your watch list by highest implied volatility rank
yeah,
highest, and go, okay, where can I get the most bang for my buck and the highest odds to win with selling options?
yeah,
So looking at my watch list, Facebook is sitting at a 48. That's the highest out of my longer watch list.
yeah,
So 48 is not that high, relatively speaking, to 99, 95 that we were seeing all of last year. But
yeah,
if you're talking about selling options, something like Facebook, Etsy's high up there, Google's high up there. Take a look at high implied volatility ranks. The last thing you probably want to do, but do your own DD, is start selling premium where there is no premium. And so
yeah,
when premium does get baked in all of a sudden and you're short premium, you're going to have to cover, right? So I think that's what you should probably look at.
yeah, yeah. That's a good point. Yeah. What Before we go on to this next question, one thing to add to that, which is interesting, is I don't know. I use Interactive Brokers, and they have this automated stock lending program. So if you're long a stock, whether it's Tesla or something else, like looking at Robinhood right now, the borrow fee. I'm not a fan of Robinhood, by the way. I'd be tempted to short it, but if I was a bull on Robinhood and thought it was going to be a stock I want to own, well, with Interactive Brokers, if you participate in an automated stock lending, the borrow fee is like 127%. It's like very hard to short. So if you're long Robinhood, theoretically, if you're long like $10,000 worth of Robinhood, you could be earning, $12,700 a year of extra interest, or your position could be that's split in half with Interactive Brokers. So $6,000 a year of interest being paid to you. And then you could potentially sell covered calls on top of that. So you get like double
Mm,
income just being long some of these kind of speculative stocks that you think is the next big thing. There was a time where Tesla had a 100% borrow fee years ago,
mm,
and Solar City years ago. Right now, Tesla's got like no borrow fee, but there are stocks out there. I know like Ginkgo Bioworks is a big name that ARK Invest is big on. DNA is the ticker. That's got 186% borrow fee right now. So some of these stocks that are highly shorted have very high borrow fees, and not just selling covered calls on it, but you could some brokers out there, like you check the box to be part of their automated lending program, and as long as you're not borrowing cash on margin, then they're lending out the stocks for you, and you can split that revenue as extra income into your account. But that's an interesting way to make money in addition to selling covered calls, I guess. Anyway, next
mm.
question.
Interesting.
Yeah, Yashu, where do you see Tesla at the end of the year heading into Q1 2022?
I'm not a fortune teller. First, I'll disclaim that. Don't know. I think what I would like Tesla to be at fundamentally, and what I think it's at versus what I actually think the market is going to price at are two different things. I think you're asking where do I actually see it. I think it all depends on Berlin and Austin. If Berlin and Austin this quarter, especially Berlin, I think is sooner. But if Berlin and Austin start coming out, and I think Rob Maurer is projecting, even if they can do something like 20 to 30,000 collectively between the two of them for the last quarter vehicles. Uh, you know, Tesla at over I think $1,000 with which is about a trillion market cap going into the first quarter 2022 is not out of the cards. I think a large portion, a bigger thing that people are also forgetting is Elon's stock-based compensation package is not going to be as dramatic of an effect on gap profits. That being said, I don't really care about gap profits as a longer term investor. But if you talk about traders coming in or people, some institutions that are looking for gap profit X ZEV credits like they got last quarter, I think Berlin and Austin is what's going to take Tesla into the $1+ trillion market cap. What's your
Yeah.
opinion on that?
No, I agree. I mean, I think if there's a time for them to cross 1 trillion market cap, this is the time, the next few months. I'm kind of worried if they don't in the next few months with all this good stuff coming out that, we could be stuck in a range of, 500 to 1,000 or 600 to 1,000 for a long time. But, I'm happy that, long time could be 6 months or 2 years. I don't know, until full self-driving is really like flushed out and
Mm,
mainstream for Tesla users and used all the time and such. But, um, hopefully we cross this 1 trillion market cap, that I think is going to be much more psychological than the $800 price point we were just talking about earlier. So if we cross that $1,000 share price, which is like about a 1 trillion market cap, then and we stay above that, that's really impressive. And I think that sets the stage for, staying between a new range of 1 to 2 trillion market cap for years to come, perhaps.
mhm.
So
And I think you can get there without full self-driving
I
valuation.
think you can. I hope so. If not, and I think if you do, it's the next few months. So I'm a little worried that if it's not the next few months, then maybe you can't until full self-driving. That's what my worry is, but we'll see. Um, from Furco, are either of you interested in investing in the battery supply chain? Seems that after the chip shortage, there may be battery material shortages. What do you think, Yashu?
Personally, I haven't deep dived into looking to invest in anything yet. I know JB Straubel has redwood materials and recycling battery there, and it's kind of
Yeah,
all the rage recently. I haven't looked into it more. I probably need to more, but I think it makes sense. When you talk about new batteries, it's much harder for them to go out and find all new material for all new batteries, especially with scale that you need in the next 5 or 10 years. I think
yeah,
recycling is probably the way to go. The question is whose batteries do you recycle? Can you trust other chemistries coming in and recycling those? Just a lot of question marks as a non-engineer that a non-scientist that I need to figure out for myself or trust other people. But it sounds like JB Straubel is doing good things with good things at Redwood.
yeah, I agree. I mean, that's going to be kind of a new industry up and coming, this battery recycling. I think CATL just announced a $5 billion plant that they're going to build for recycling batteries in China. So yeah, it seems like a new industry that's going to be growing. Um, The battery supply chain, yeah, like there's so many. I think Elon referenced that quote, like they have sort of a Baskin Robbins of battery flavors right now, like too many different battery chemistries to be using all at once. And but I think that also allows them to be nimble based on what the supply chain is dictating to them. So if there's a real shortage of nickel or some kind of supply element, rare earth element, then they can perhaps pivot to a different battery cell chemistry for the next few years or something. So, there's some advantages to that, but I think ultimately they'd like to have, like he mentioned on that earnings call last time, that they'd like to have just a couple of flavors of batteries they stick to. So we'll see what that is. But yeah, I haven't looked at the battery supply chain enough. I know there's like some lithium plays, and people talk about lithium all the time. I mean, that's the buzzword, lithium with batteries. But Elon's mentioned it's like that's like the dress. It's like the dressing on a salad. It's and the battery is the salad. There's just a little bit of the battery, and there's plenty of lithium in the world. So I don't know if that's the one to focus on. I think there's other uh, materials probably that should be focused on more than lithium. But I just haven't dove into it enough.
Mm.
From Martin Muldoon, Emmett, could you elaborate on margin shares? I have 450 shares on margin, but have a huge buffer. Interest rate is a bit high, but doesn't it make sense to hold, give Tesla's growth rate? Um, so margin shares, I'm not sure what that means exactly. I mean, I assume he means like if he has 1,000 shares of Tesla, if he has enough cash. Let's say you have $810,000 cash in your account, and you bought 1,000 shares of Tesla at $810. That's all your cash, and then you buy another 450 shares on margin. Let's say, then you're using margin from the $810,000 to own the extra 450 shares of Tesla. So it really depends on what your base is. If you have 1,000 shares and you buy an extra 450 shares on margin, that seems pretty risky to me to have 50% extra margin almost on Tesla. But if you had 10,000 shares and just 450 shares on margin, that's sort of inconsequential in my mind. Um, you know, but it's still having any kind of margin is probably not ideal. And interest rates, yeah, I mean, Interactive Brokers has the lowest interest rates for margin, hands down. You could just look on their website and compare it to whoever, unless you're some institutional trader, that has a giant deal with Goldman Sachs or Morgan Stanley, you're not going to really you're not going to get anything close to the margin rates of Interact. So it's just a matter of how important you want to pay, 1% interest versus whatever your current rate is. Could be, E-Trade or Ameritrade, they're charging like 5%, 10%. I've heard, Robinhood's ridiculous. So if you're planning to hold those margin balances and you're willing to just give that extra 8 or 10% to Robinhood or whoever, then that's fine. But you just have to know that you're paying that extra rate when you could easily switch it to a broker that's much less user friendly, user experience friendly. Interactive Broker is not the most user experience friendly broker, but you'll save a
Mhm.
ton of money when you use them, and they have good technology if you learn how to use it. But it's not
You're not
user.
biased. You just used
Yeah.
to work there.
Yeah. Yeah.
I also use them too. I can vouch for them.
Okay. You use Interactive Brokers too? Good. Yeah. So I
Yep.
mean, you just get the best rates there, and if you can learn how to use their stuff, you just know you're getting the most cost effective broker possible for whatever you're doing.
Yeah.
From Alan Leung. And just to answer the last part of the question, I mean, yeah, I know Tesla's a growth stock, but that's almost more worrying in the fact that, like, if there's a big macro market correction of, another COVID crash where everything goes down, like, when the COVID crash, Tesla was at like $800 before the COVID, and then the COVID crash hit. It went down as low as like 300 and something dollars temporarily. So it dropped like 60%, even though the rest of the market was dropping 20 or 30%. So that could happen to Tesla, even though it's a growth stock. If the market crashes 30%, Tesla could crash 60%. So you have to be aware of that with regards to margin. Just because it's a growth stock, it doesn't mean it's almost more risky to have margin with it. So anyway, this question from Alan Lung. Elon mentioned he will need to sell a significant number of his shares to pay for his 53% tax rate. Do you anticipate a decent drop? I don't think that's going to impact the stock anytime soon. I don't know about this law uh, yet of the wealth tax. I think he might have been referring to that. But with regards to his options, I think he does have to sell a certain amount of the shares he gets through the options to, you know, cover the cost of his shares with the tax rate, but I don't think it's a big deal. It's over such a long period of time. And I don't know. What do you thought? Yeah. What do you think, Yashu?
I think this stems from that interview that he did where he talked about, "Hey, I'm gonna have to towards the end of the year, have to liquidate and have to exercise some of my options." Now, the question is, does he have to sell shares to fund his options exercision, or can he just sell a portion of his options to then fund his depending on the strike price and all the math and all that stuff, to just sell some options? But either way, this kind of narrative has been run with as of late, the last couple of weeks about Elon selling towards the end of the year. I think Dave Lee pulled out his tweet and retweeted it last night, and he said Elon
Yeah.
said in 2013, "My money is going to be the first in and the last out." And I think we kind of, for me, that's good enough. Where and albeit all things being equal, and he's still holding true to that. I don't see him flying out of Tesla all of a sudden liquidating any significant portion of his shares by the end of this year. I don't see it.
Yeah, I agree. I don't think it's going to be a market moving event for Tesla, to be honest. Yeah. Next question from Ben Rabstar. When do you think the forward PE will come down below 100 sustainably? What do you think,
I
Yashu?
think I think 2020 end of 2023, 24, 25, somewhere in that range, depending on factories. In 2025, I've kind of modeled out if Tesla can hit 5 million cars sold in 2025 at a 40,000 ASP, and that's assuming that the 25,000 model is out by then. That's about 40 billion in gross profit. At 40 billion gross profit, if you want to talk about market cap and applying a 40 PE even till then, it's a 1.6 trillion market cap in 2025. Discounting that back, it's about $1,100 a share, which I think is about fair value for Tesla at the moment. So I think as those factories grow, as soon as you see and you see Tesla and executives start signaling, "Hey, we're going to be slowing down factory growth at this point, and we don't see one coming out, a new one being built in the next 1, 2, 3 years." That's
Hmm.
when I think P is going to come down substantially, and I don't see that until maybe 24, 25.
Yeah. I think end of next year, 2022, I think we're kind of at the best forward PE this quarter we'll have for the next several quarters because there'll probably be some extra expenses to building up these factories, getting them online for the next few quarters, I would imagine. And the stock prices come up already. But, and last week when Matt was going over, and I were going over his estimates for this quarter's earnings, and I think we estimate like it could be as high as $1.80 or something like that. And then $1.80 over 4 quarters, that's $7.20 and per year. And so Tesla's at $780 at the time. So it's getting close to 100 PE already based on this quarter. Not there, it's probably like 110 or 120. But if that marginally goes up next quarter, let's say, or the quarter after, you could see it being almost at a 100 PE based on the stock price if the stock was staying at 780. Obviously, we're already at 810, and there's a good chance the stock continues to rise. So I think the forward PE coming down below 100 is in range, but it might not be. It might not catch up until the factories in Giga Berlin and Austin start really ramping up, which is probably end of second half of next year when they're kind of ramp. It's going to be a slower ramp than probably people expect. A lot of people, I think, a lot of Tesla investors are just like, I remember when Gigafactory Nevada came online, and I was like, anticipating, like, they made the announcement and Adam Jonas upgraded the price to like $250. And I was like, wow, this is big. Gigafactory is going to be built. It took like years for them to like select the site, to like make the site, and they're still not even full capacity gig in Nevada. So, but that was different. That's like a, crazy cooperation with Panasonic. Probably is a lot of red tape to go through and stuff. But Giga Austin and Berlin, I've learned a lot of lessons, and they did Shanghai surprisingly fast. But I could see it taking a couple of years to really ramp up to like the full capacity they want to. And so I'm just guesstimating end of next year is when it's somewhat substantial, where the margins are really increased and impacting earnings per share in a very positive way. Where maybe the forward PE will be below 100 by around then, based on probably a stock price being above 1,000 by then if it goes really well, I would think.
Yeah. I guess I'm just more bullish on the stock price then at that point because I don't think it'll be sustainable. Yeah, but we'll see. We'll see.
All right, let's do one more question here. What do we got here, Alec? Okay. With the exponential growth of car sales and full self-driving, is it worth it for Tesla to enter smaller industries like HVAC? Hmm. What do you think, Yashu?
I'm in the school of thought where Tesla can do a million different things, but what Tesla should do should be core to their mission, which is
Mhm.
obvious. But also, I think Tesla should finish up what they've started in a lot of different avenues before they expand. Namely, let's say Cybertruck or energy, or let's say 25,000 model, which is we know is going to be introduced in the next, let's say, year ish here. I think expanding further without finishing is something that Tesla should, and everyone's saying there's a new high on Tesla.
Nice.
And so, should they go into HVAC? Likely, yes. I think everyone in my comments says HVAC, HVAC, HVAC. So I
Yeah.
know it's very popular, but I think as soon as they tie up some of the stuff with the product lines that they haven't released yet, like the ATV, even is an example, I think they should prevent themselves from expanding again into something.
Yeah, if they have too many small industries, they're kind of, I don't know, they're spreading the resources thin. I mean, they're already, yeah, like you said, they stick to their mission for the most part. And, the one thing that's sort of different from their mission is the AI, the Tesla bot that they're going to go forward with, it sounds like. And that's exciting. That's a huge market. And Elon, realizes like, if they don't do it, someone else will. And Tesla's the king of manufacturing, or in his mind, will be the king of manufacturing. That's kind of like their biggest advantage, core competency. It seems like he thinks. Um, so, other than the Tesla bot, I think they really want to stick to their core competencies of accelerating and also in addition to the AI bot is the or the Tesla bot is the neural network technology they've built out with being able to apply it to real world kind of AI applications. I'm sure they'll find interesting use cases for that. Probably using the Tesla bot, but also maybe they'll outsource it to others to use in a way or license that type of technology somehow. But yeah, stick to the mission statement, accelerate transport. HVAC is interesting. Elon's commented on it a few times. It sounds like that's in the cards. But other than that, we'll see. I mean, maybe they'll do some more pet projects like flamethrowers and beer or tequila.
Hmm.
They'll do stuff like that from time to time. And, I'm sure there are tons of people like us that'll just buy up whatever they make. But
Yeah,
um, we'll
it's free
see. So,
advertising.
yeah, free advertising. Yeah. So yeah, I mean, we're at the end here. It's been a real pleasure having you on, Yashu. Any thoughts? One question for you is, what do you, if you have to guess, what do you think is going to happen at the close today? Do you think we're going to run up to a higher price going into the close, or do you think it's kind of close to the high of the day right now? What do you think?
I have a devil and an angel always on my shoulders. So the devil in me is like, hey, as long as we close above 800, I'm content. I'm happy. I'm keeping
Yeah.
my expectations low. But really, I mean, above 810, there's not,
Oof.
there's kind of thin air moving up. Like,
Yeah.
840, 840, 845 is kind of the next full level up.
Yeah.
Even that one is a very thin one, to be honest. So I think
Yeah.
as long as demand is high and to be honest, macro is turning around, so this is good. Um, I'm gonna say my prediction for the day is an 8:15 close. How about that?
Wow. I predict 825.
Oh, there you go.
825. I'm going to say. We'll see. I think that, like you said, there's a lot of thin air once we broke through this kind of 800 psychological barrier, and we're just gonna kind of appreciate fast. There's not many sellers here, but there's someone buying, right? And someone's got to sell them the shares, and the market makers are gonna just have to sell at a higher and higher price as they hedge
Yep,
themselves and such. So I can
absolutely.
see us getting pretty high next couple hours. We'll see.
One thing to
But yeah.
note, by the way, just on that last thing is volume is declining though. So one thing to realize is, when volume declines, moves are a little bit easier to do, but also can fade a lot easier as well. So something to
That's
watch out
true.
for.
That's true. I mean, it is 145 east. You typically from like 11 or to 2, the volume is a lot lower. 11 to 2:30 even. Volume typically picks up at the end of the day from like 3 o'clock. The last hour volume typically picks up substantially. So we'll see if there's some institutions that need to finish their buy orders for today from 3 to 4 if they step up the volume and the price comes up. That's what I'm suspecting.
Mm,
So. We'll see. I
825.
have no idea though. I'm just, if I was a day trader, I would play that, but I'd probably
Right
lose
on.
my hat on that. So yeah. So
Right on.
cool.
Thanks for having me
All
on.
right. All right, Yashu. Thanks for having on. All right, stick around for a second. Thanks,
Peace.
Alec. You'll cut it out. All right.